Good morning, everybody. It's Chris here from Serene Education with the four majors news update for the 17th of October 2013. D-Day has arrived, guys. US side, stateside, D-Day has arrived. Shutdown, ceiling debt issue, all clear. It seems as a deal has come to fruition yesterday. We saw that occurring on the market. We saw news what the effect was that occurred yesterday afternoon from 2 p.m. GMT onwards. We had an initial pullback on euro against the US dollar initially. However, through to 4 p.m. GMT yesterday afternoon, then we saw the upside kick in, and subsequently price for euro has been trading slightly higher against the US dollar going into today. And if we look at the daily chart for euro against US dollar, you can quite clearly see that a lot of movement yesterday, and subsequently the outcome was a spinning top, or doji, in fact. Nice clear doji here. Very, very strong candle. Well, in terms of the actual width, the trading width, we had overall, I think it was, the overall move was roughly 96 pips for the day. However, you can quite clearly see that we finished off with a clear doji here. This is all happening at a price support and resistance level on the daily. You can quite clearly see the 20-period moving average here acting as a clear support as price has been consolidative over the past couple of weeks. Noticeably, we're still making swing lows. And you can see the candles in play right now. You can see the indicator box is primarily telling us we should be looking at buying opportunities. So that sentiment coming through, the knee-jerk reaction initially forcing euro lower into the 50-period or 50% retracement levels here, which happens to be the long-term support and resistance level. And subsequently, we saw price last night going into the close starting to look more favorable, and over the Asian session pushing price higher now. So ideally, if this is to be long-term, well, it is still long-term positive, because you can see the candlesticks are still very much positive. The indicator box is telling us all that. However, we do need to close below or above this prior swing low. You can quite clearly see a lot of spinning tops here, dojis, and then we have this bearish engulfing candle, or a bearish fall lower. So that needs to get out of the way. So a nice daily bull candle here would do a lot in terms of telling us this is a nice strong support level now, and we should be looking long-term back up towards this current level here as our first target, but ultimately to the current highs through the earlier parts of October as our initial long-term target. So price is trading right now at that current support, and listen, if you look at where she's able to go to, we have a nice 85 pip profit at least to those levels. So look to see for a nice buying opportunity, or a nice bullish engulfing candle close on our 4-hour time frame. Here we go, we're going to the 4-hour time frame right now. You can see a lot of bearishness yesterday to start with. However, that knee-jerk reaction to the news on the Fed bailout, and you can see quite clearly the sorry, not the bailout, the debt issue, as well as the shutdown. And then we've seen a nice remarkable move yesterday afternoon going into this morning in particular. We've seen a lot more buying through the Asian session. Now we're testing the prior swing, the swing lows. So we need to see a nice bullish engulfing candle on the 4-hour to confirm this is now juicy support, and then we could look to the prior targets, ideally to this level around here as our next swing target. So anywhere above this current swing to that level, you're looking in excess of 33 pips. Not a lot of, you're taking a lot of risk for that, but however, the setup is likely to then look positive long term for euro against US dollar. So be patient here. Very, very important we get closes above here. Ideally, give it if you can, give it a whole day back to the market, because remember, we're still in an intermediate downtrend here. We don't want to be faked out. We don't want any shooting stars here, exhaustion candles, another tweezer top potentially to occur around this area. So far better to give it back to the market and then see what it's done. And then, because the news came out last night, so the European market's going to have to take it all in. The US or the Asian market's taken it quite nicely. Let's see what the European market has to do with it today, and that will then guide us for the foreseeable future. Sterling on the daily, here again we've seen very much in an uptrend for sterling against US dollar. Swing highs very much in play, and then we had a lot of indecisiveness coming in at the weekly fib here at the 23.6 a number of weeks ago, pushing price lower. There had the pullback on a price support and resistance level, as well as a 1600, and our psychological round number 1600. Then price broke below that level and consolidated throughout last week in particular. And then yesterday, you can quite clearly see this candle very much a spinning top compared to the doji we saw in the euro US dollar. This happening at the daily 23.6 level. So it's actually been sandwiched between 2 points, the daily fib level as well as a major support and resistance level in the shape of a 1600 and our psychological round number. And yesterday you can see that the movement, quite a high movement rate, and we had an excess of here about 165 pips on sterling for the, so it's quite a big range to trade, but you can see the indecisiveness in here as well. And exactly the same thing happened with euro. We had that knee-jerk reaction. So if I take it onto a 4-hour time frame, you can see that. Let me just move it over, just pan out a bit so you can see it. So making swing lows up until, and then we went to this consolidative range, and ideally we want to see a nice a daily close higher or lower than this consolidative range to give us an opportunity to trade. We did get a 4-hour breakout yesterday, but subsequently we need to see the pullback and the continuation. The pullback candle, the hourly candle, which I used to enter, failed to actually close above the current 4-hour candle highs, which subsequently told me that there was no buying sentiment in this, the follow-through sentiment, and subsequently price fell lower and engulfed the entire range, guys. So we had this knee-jerk reaction, sterling moving higher. Then we had a major pullback for the pair, closing or taking away all of this sentiment over here. So if you take a rectangle just to show you that sentiment, there we go, engulfing all of that. So quite a strong engulfing candle. And if I just move it over so you can see that, there we go, engulfing the prior consolidation. However, on the breakout candle, we wanted to see a pullback and then a continuation low, because remember, up until this stage it had tested the 23.6, not closed once below it, just tested it. You can see the institution moving average also acting as a clear support level through this period. We had the breakout candle, which was important. Then we need to see the pullback and the continuation. The next hourly candle after the 4-hour close needed to close lower than the 4-hour low. And you can quite clearly see here, if I just go and put that 4-hour candle low on, as a yellow horizontal line, okay, so we had the break of the institution, which is very, very good. We had the break of the institution moving average, as well as that support, a nice bearish candle indeed. But if we drop down to a 1-hour time frame now, we needed to see that force to continue lower. And if I just move it over, you can see this is the drive candle lower, but the next 1-hour candle should have closed lower than this 4-hour candle. This is makes up the 4-hour candle. The next hourly candle closed lower to tell me that the sentiment is generally moving lower. That failed to materialize, and subsequently we saw a tweezer bottom at a major support and resistance level, i.e. the 23.6, and price has now been on an intermediate uptrend since then through the agency, through the last part of yesterday. In fact, from 4 p.m. GMT onwards, we've seen a climb for sterling against the US dollar. Trading back into the institution right now as we speak, which happens to be the current highs of the consolidation highs. We had a breakout, this is a failed breakout yesterday. So ideally, got to give the 4-hour candle back to the market. We need a bullish engulfing candle break higher, and then we need to see our 1-hour candle closing higher than that 4-hour candle high to tell us that there's true sentiment behind it, and then we can start looking towards the price swing lows, or sorry, swing high. Here would be the next target. You're looking in excess of 79 pips. Get to that one, and then on top of that, we can look back to the prior highs or our weekly highs here. Quite noticeably, there's another 80 odd pips. So there's more than enough in here to trade to the upside, but we do need to see a nice a genuine confirmation breakout to the upside of this consolidated range, a nice juicy pullback on the hourly and close higher than the 4-hour to look at an entry higher, and vice versa to the downside. Very, very important. US dollar Swiss franc. Now again, if the euro is climbing, we want to see the US dollar Swiss franc falling, and we saw a consolidation pullback yesterday, well, for the past couple of weeks, as we trading back into price support and resistance levels. You can see there's a consolidation high, consolidation here, a lot of support through here. Notice we're trading below the weekly fib, below the monthly fib, below the institution, below the 50-period moving average. The only one that was in play was our 20-period moving average. The RMO very much below the zero line. The only OSMO indicator here is telling us we were in consolidation, and sure enough we were. You can see that the overall sentiment indicator here, the FX8 template, is very much negative, and the R-squared is complementing a lot of that negative sentiment. So yesterday's movement, there again also yesterday very much a spinning top, knee-jerk reaction. Look at this, guys, very, very indecisive yesterday. We started off a couple of days ago with a nice breakout, the pullback, and then the failed continuation higher, because the hourly candle that preceded the 4-hour candle failed to close above the institution as well as the 4-hour high, and subsequently there was no buying sentiment through that. It was just a knee-jerk reaction, and subsequently it maintained above the breakout, which was important because that tells you that there's still more sentiment to the upside to come. Sure enough, we did get it yet again a bullish engulfing candle into the institution moving average. However, on the hourly candle, failed to close higher than that, which would have taken us above the institution. So therefore, no buying opportunities. We almost had a tweezer top, and subsequently the US dollar has been falling against the Swiss franc since then. So here, ideally, like to get back below this current intermediate trend. You can see the 4-hour candle that's in play right now. Let's have a look and see how much time we have left on this particular candle. Just move it on to here. There we go. We've got another 36 minutes to wait for this candle to close. If it does close lower than this, look for the consolidation pullback and then the continuation lower on the hourly to break that 4-hour low. And then look to target the next levels down, which would ideally be this level over here to start with. Oops, I can draw a nice straight line would be fantastic. That one over there, and then ultimately back down to our current lows at the bottom here. So effectively from the swing low over here to that level, you're looking in excess of 50 odd pips, and then from here to the next low, we're looking in excess of 40 odd pips. So there's more than enough in here to see a genuine return on investment. Just got to wait for the clear breakout at these levels. Last bit of the day, US dollar Japanese yen. Here again, we're moving within a wedge. I've not been trading this one. I've mentioned on a number of occasions that I want to see a nice daily close above the 50% retracement level, fib level on my monthly time frame, which has got to be well above 100, which happens to be the prior major swing low. And then I also want to see a major bearish engulfing counter close lower than my weekly, and it's got to have genuine sentiment. So here was a nice bearish engulfing counter close lower on the daily. We had the pullback. However, the continuation candle failed to materialize, and we had a bullish engulfing candle move higher. So this was actually a fake out, and price has been moving back within this wedge formation. So here, bearish engulfing, as you quite clearly see over the Asian session, you could see a lot of selling sentiment on our shorter term time frames, and the R squared is complementing that. However, our long term sentiment is still very much looking positive. So we are still consolidative in a positive trend, and as long as the institution moving average maintains below the below price in particular, we should still looking for buying opportunities. The candlesticks nonetheless are still looking negative, have been for a while since September. So we have a full month and a half of negativity. This is the reason why I have not been part of the speculation bunch. I've just wanted price to get above one area and below one area, then I'll start making my decision. At the moment, it's trading within a consolidation range. There's a lot of speculation still noted to this particular event, and I don't want to be doing that. I don't want to be speculating. I want a true defined movement from the market, and I'm more than willing to be patient enough to get that, because once we do get it, then I can start looking at genuine opportunities with direction. Anything above the 50% fib retracement here to the next level, I'm looking in excess of 166 odd pips, which is far better. And below this 23.60 on the weekly, if I look at my monthly as my next target, is a nice juicy 276 pips return here. Here, can't make heads or tails of it. It's all over the bloody place. Not worth getting into. Rather wait for a break, close higher here, or a break and close lower, and then we can start looking at setups. Okay, guys, short and sweet. Please, if you are using this template or any of the Serene Education templates, please back it up. One was sound, follow the rules, and then back it up with sound money management. Okay, guys, so important. Other than that, keep it as simple as possible, guys. Please do not make your trading complicated. It's complicated enough as it is. We don't want to be making it a lot harder to read. So just plot your major support and resistance levels. Look at candlestick patterns, formations. Look at the sentiments in these candlesticks. Candlesticks are very, very informative. You just got to understand how they react around major support and resistance levels. So if you see breakouts, look for the pullback candles and look for those continuation candles to form. If you get the continuation candle, then start looking at potential targets to the downside or the upside. Okay, leave you with that. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, you guys trade serenely.